Welcome back, everyone. Next, we have Cyios Corp. It trades on the OTC Pink sheets under the symbol CYIO and is a publicly traded holding company focused on innovative tech, blockchain, Web3, NFT, and carbon offsets. Happy to welcome its chairman, John O'Shea, and an advisor, John Shapiro. Welcome to the conference, gentlemen.
Thank you. Thanks for having us, Anna, and thank you to Emerging Growth for putting this together. It's been great. You've been very efficient with very little time. So thanks.
Good. Well, we're glad you're here. Give us a little introduction about yourself.
Well, I'm the chairman of Cyios Corp. I took over Cyios Corp about 4 years ago. As you said, it's a publicly traded company with its ticker CYIO. We have a number of businesses that we have been developing over the last 3 or 4 years, and in doing so have had great experience in some of those businesses when the market was on their side. Helio Lending was acquired some 2.5 years ago. That was a business that I started up after 3 other startups that I'd been involved with, which I'll give a little bit of background on shortly in regards to my financial background. So Helio was acquired. It did amazing things for the company. The market was very strong, and then unfortunately, the crypto market moved quite dramatically, and we ended up not doing as much business in the lending space as what we would like. But that has turned around, and that is definitely coming back, and something that we're definitely focusing pretty heavy on. My brief background is I've had 3 startups, one in financial planning, one in stockbroking, and then Helio Lending. So they've been all very successful. I've been able to sell those businesses on to large corporations, and now this is our next journey that we're going on. I spent a lot of time cleaning up Helio and making sure that the debt structure is correct, that the shareholder structure is correct. We're now audited, so we've had the last 2 years of financials audited, and also the CEO and myself recently on unpaid salaries have taken those in common stock, restricted common stock, which is well and truly over the market by over 100%. So that's showing the confidence that we have in regards to where we're heading. Also in regards to that, I've made a commitment to the company that I've moved from Australia. As you may understand, I've got a bit of a twang in my accent, so I hope that's not too difficult to understand what I'm saying, but I've made a commitment to move here to Australia, and we'll be moving the family, some of the family members over in December, January. So to really give big support to what we're doing. So in regards to the businesses that we have Helio Lending, which is crypto lending. We have CarbonCred, which is a carbon offset business, which allows businesses to buy carbon offsets. We have Immortals, which is a NFT platform, which we're currently just holding and waiting for the market to come back so that we can reignite that business model. I'm really lucky to have John with us here, and I'll let John do his own introduction, but through the journeys that we've had in business together and the CEO, John's come on board. We've got a really exciting business opportunity that we want to highlight today, and we'll be able to give a lot more meat on the bone at the next presentation that we do. So without any further ado, John, if you could give us a little bit of an introduction about yourself.
Thanks, John. I appreciate it. Nice to meet you, Anna. So I work in the mortgage industry. I started my career originally many years ago working on Wall Street, working at one of the large brokerage firms. Came to the realization of what the bond market was doing and how it worked out. Decided to open up my own mortgage lending company, which was located throughout the United States, built it, grew it, actually at some time before the meltdown in 2007. Prior to that, I folded that company into another organization. Over my years in the mortgage industry, I've helped companies grow what we call distribution channels in the mortgage industry. They're the retail side, where you lend out your own money, and in order to do that, you have to have a channel of people around the country called the distribution channel. I've helped companies grow that out on various occasions. I've run some companies where we've done a few billion a year in origination. John came to me along with David and discussed about opportunities, and I explained to him that I felt with the way the market is today, the best opportunity is getting into this sector, into the real estate sector at this point. And he asked a very poignant question: isn't the market, aren't the rates high? Why would you get in now? And we all know the herd mentality. You never follow the herd. You always try to be an innovator. And right now is the time where we feel the next 12 to 24 months, interest rates are going to come down. We know the Fed's going to be making cuts. We know we've had highs in these interest rate markets over the past 24 months, which has slowed the market down. So now is an incredible opportunity where they could pivot themselves or add to their existing portfolio of companies and grow and have enhanced value. So I came on as an advisor to help them and guide them.
And as part of that advice, you've got a team of people, a team of experts that work with you. Can you give us a little bit of understanding and how that will fold into what we're doing?
So, I've worked with a team that's been with me for 15 years where we've helped other companies grow. They have contacts across channels to build, grow out a channel throughout the United States, operational experience. So these people have done this before along with myself, and they are prepared to help and advise in this capacity.
Fantastic. Well, thank you for those origin stories of both of you. Talk a little bit about why this industry specifically. You mentioned it a little bit earlier, but hash that out a little bit more.
Absolutely. So we all do know in the market back in COVID experience 2021, the market exploded with refinances, correct? Well, usually you try to get into an industry or a sector that has a proven cycle. Now, we know we've been downturn of this cycle now for 3 years. Cycles go every 3 to 5 years. So why get into this industry now? Because you're trending in the future for the upward portion of the cycle is going to start in the next 12 months. So you try to be ahead of that curve. So now is the time to get into it because the sector is a phenomenal sector financially. And it's a great opportunity for a company like Cyios to get involved and have enhanced value for their shareholders.
And explain a little bit more about Cyios business and the business model. What exactly does it look like?
So with John coming on board, we're entering the mortgage business. We see that as a stepping stone into further acquisitions. So we won't be doing this organically. We'll actually be going out and buying established broking businesses and then scaling those together so that we can get some volume. There's also some ways in which you can increase the revenue potential and then obviously growing that substantially. And we're looking to start this now. So this is something that we're actually, putting pegs into the ground and actually, developing this strategy. Already have acquisitions in place that we're looking to finalise some acquisitions very, very soon.
And talk a little bit more about that growth. Where can this be in 12 months, 2 years, 3 years?
So 12 months, the company could be generating 300 to 500 million in gross residential volume, which could equate as gross revenue, additional 15 million a year. But where can it be in 2 years, 3 years? You could take that to $1 billion to $3 billion in originations, which then changes the landscape completely of the company. Because on that numbers at $3 billion, you've now elevated yourself and you've made yourself a player in the marketplace. And then it gives you the ability to pivot to other aspects. And there are peripheral types of businesses that go along with the mortgage sector that they will probably entertain opportunities to get involved in and purchase or joint venture with.
Well, highlight a little bit about some of your history. You obviously survived 2007, 2008. We just went through COVID. We're coming into an election year. So when have you done this before? What successes have you had in the past?
Well, we assisted a company to grow from 5 offices outside the western part of the United States to 150 offices to a $10 billion a year origination. We've helped smaller companies grow to the $1 billion, $3 billion size. One of my team members, one of his offices years ago was doing $1 billion a year. So my whole team has 20 plus years individually in experience of growing out a distributive retail channel and creating these originations.
I think that's part of the value that actually John's bringing an established team of experts into the fold straight away. So, and that's part of the overall attraction to us, that it gives us that real skill set that you need to have, and they're part of the overall structure moving forward. So,
and with that skill set, talk about the scalability. How scalable is a business?
Extremely scalable. They're going to look to scale their acquisition. They're going to vet out, isolate a few different acquisition targets, and then they're going to grow that business out throughout the whole United States on a nationwide platform to try to make it a platform across the whole United States. Obviously, isolating various states and areas that are more prevalent to do business in, but they're going to have retail channels probably in a majority of the states.
And talk about why going public. What are the advantages of scaling this model, this business under a public company?
Well, I think there's a number of key elements there. One is that when you're purchasing these businesses, a cash-only component can sometimes not necessarily be as attractive as having opportunities of diversifying that payment into equity. So there is an opportunity that we will be able to use the equity within CYIO to strengthen our relationship, but also then strengthen the relationship back to the original person we're buying it from, because they will be holding underlying shares in the company. And if you have a number of these groups holding it, it's obviously going to build for a lot of strength, and they will be able to see their own value being delivered to the share price. So it links them back.
And so walk me through, like, what's the typical multiple revenue stream do these businesses trade for on being acquired? How does it work?
Right now, I'd say they trade probably 2.5 to 3 times. But when the market changes and goes where we expect it to with the cycle, they trade 7-time multiples. So there's a complete value play here in order to show where the market's going to change, go back to, and increases enhanced value. Besides the book value of the company increases and your P&L increases, it has a two-pronged effect to help Cyios.
Now, you mentioned interest rate earlier, but talk a little bit more about that. I mean, how is the current interest rate and the possibility of it being lowered going to affect this market?
It affects it in a very positive manner. With the way the numbers came out and staving off inflation and so forth, we know over the past couple of years, Feds have increased interest rates, the Fed funds rate. But now everything that's being said in all the remarks that we're going to have at least 1 to 2 cuts this year. Maybe we're expecting 1 in September prior to the election, but we could have as many as 2. Well, how does that affect? Well, that's the Fed funds rate, but that flows directly to the bond market. So then you're going to see rates readjust themselves. And what we do know is this market has had 2 issues: low inventory and less people qualifying for houses, because as interest rates rise, less people qualify. So what's going to happen when interest rates go back down? More people are going to qualify. People are then going to start to release their inventory and try to sell their homes. And we're going to see a movement in the market. And I think that effect is going to help the economy overall. And when it does, it's going to have a snowball effect where interest rates are going to still come down more and more. And we might see a plateauing of these interest rates coming down to the 4s, 5s, which is really going to have an enormous effect on the market, enormous effect in the sector, and it's going to help every company out there, and it's going to have a trickle-down effect to the economy.
That'd be great. So talk a little bit about the vertically integrated aspect, the model that you have. What other opportunities exist for this, the model?
Well, the model gives opportunities for joint ventures with peripheral industries and companies that have to work with mortgage companies, such as title companies and such as insurance companies and appraisal companies. So it gives abilities for, as long as you follow the rules and regulations, to partner up or have a, acquisitions, but you could also just have relationships of cross referrals. I mean, there's many different ways to approach it. So there are peripheral industries that work in tandem with the mortgage industry that would help down the line enhance value.
And let's talk financials. How much business has the original team generated annually over the past 3 to 5 years? And talk a little bit about the future. What's the top line total loans, gross net revenues? What do you guys have?
Well, this is all beginning. So in regards to what we're talking about now, we're just going out and doing the first acquisition. So the numbers, there are no numbers related to that part of the business.
So my team has originated over the 3 to 5 years, billions of dollars of origination. But they're looking to, and I came in as an advisor to help them look at and evaluate a company before they acquire one to make sure the numbers look good. There's upward potential, how they can enhance shareholder value. And I'm going to look at their operations team and the executive team to make sure that it works well with Cyios and they can bring value to them as shareholders. So my team is going to come in as an advisory capacity and just advise them for now and just show them and help them and make those evaluations along with them and just see where they go with it.
And what obstacles are you facing or anticipating to face, and how are you going to overcome them?
Cyios or mortgage side? Which side?
Both.
Well, I think that from Cyios' point of view is that we've got to be a lot better at communicating with shareholders, and this is a start on that journey. I found it difficult when I was based in Australia to have that communication. Now that I'm here in the US, it's a lot better, and I'm meeting shareholders. I'm exposing ourselves a lot more. So I think that's probably been something that we could improve on, and getting that message right to the right shareholders and building a strong base, not only with retail and wholesale investors, but also from the people that we're purchasing businesses from, so they can understand what it is that we're going on, so that we can get them to be really holding on to those shares in the event that that's an option we put on the table.
Yeah, and John, talk a little bit more about that. What message do you have for shareholders today?
Well, we're looking at building shareholder value. That's what we're looking for. I haven't been rushing into this. We've had an enormous amount of opportunities being presented to us over the time. And I was in London just recently looking at a business which unfortunately we didn't go ahead with because the numbers weren't right. We're looking to build long-term shareholder value. And so doing that by entering into this space, it's a space that I'm fully aware of from Australia and have built a brokerage business before. I believe that this will give us very, very strong underlying asset and growth for the company and for shareholders, which will then allow us to go and expand into some of the other stuff that is probably a little bit more cutting edge and exciting.
And what are you most excited about when working with John O'Shea and John Shapiro?
Well, I'm excited to work with John O'Shea because, great guy, understands the business, understands the whole aspect as a global platform, sees clear directions, telling us exactly what his direction of Cyios is, how it needs to interact, what he's looking to accomplish. And, again, we're working in just giving advice, but, he's an excellent, businessman who has really the knowledge of how to move the company forward, in my opinion.
Thanks, man.
Yeah. And what kind of like a closing message for potential investors out there? Tell us a little bit why they should look at your company for an investment.
So as I've said, we're very tight. We're very guarded about the shareholders that we're trying to attract. We have really good, solid business potential in the business that we're doing, both internally with Helio and CarbonCred, but also this new venture is very, very exciting and brings long-term cash flow to the shareholders. We are not here tomorrow, gone the next day. We are here for the long term. I've already proven that by sticking out the last 4 years over difficult times, making sure that the company's clean, that we're audited and we're doing the right things, doing the filings and abiding by all the guidelines that we have to. Then we're going to be doing, obviously, with John's business, that's going to be an exciting opportunity with foundation growth. And then we're continually looking at more expansion opportunities and acquisitions.
Wonderful. Well, what's on the horizon? What's down the pipeline that we can look forward to?
Well, we've got a couple of things in regards to NFTs and real estate. That's been something that we've been envisaging quite a bit. Some partnering in regards to some of the capabilities of how we deliver that, which I think is unique. Probably something that we probably talking about early next year, and we'll have that ready. But we also have the platform all ready to go as well. So we've got a turnkey solution there. And then obviously gearing up Helio now that we're coming into a new crypto market boom. We're getting a lot of inquiries for crypto loans. And it would be surprised to most of the people listening, 95% of our loans are to help with finalising a property loan, where they haven't been able to asset value the crypto. So they come to us, we can lend the crypto, and then they can go off and do those loans. We were very, very large in Australia, and now we're going to be focusing on the US. So we see that growth. And as I've said in the past, you know, the stock went to 80 plus cents when we did this past time. So it's exciting times.
A growth in the US is starting to be attracted to this.
Yeah, very attractive.
Okay.
Yeah.
Okay, good. Well, what closing remarks, John? And John, it was a pleasure speaking with you. Please close it for us. What do you have to say for our viewers today?
I'm just excited for Cyios, the direction they want to move in. I'm here to, give them the best advice possible, in my opinion. And I'm excited to see how they do in the future. But I am believing with John at the helm there, they're going to do some great things going forward.
So I'd just like to say I'm here. I'm on the ground. I've met a lot of shareholders. I want to continue to meet shareholders so we can give you our details, put in a call, we can have a chat. I'm on the ground. So that would be my message, that I'm available and want to speak to people and understand where they see the advantages and disadvantages of our business model moving forward and how we can improve.
Fantastic. Well, we appreciate your time and presentation today, and we look forward to following along with your exciting journey. It's a good time to be in your industry.
Thanks, Anna. And again, thanks to Emerging Growth. It's fantastic.
Thank you, Anna.
Perfect. Thank you both. All right, everyone, stay with us. We'll be right back with 22nd Century Group.